Hello everyone, welcome to the weekly market outlook and SG stocks discussion on the 12th of September 2021. As usual, we're going to look at the US indices and then the Singapore market. Of course, we are going to continue the web chart that I've covered last week. As I mentioned, it is free for you to use for now. So take this opportunity and try out this awesome chart where it provides a whole lot of features that you can use in terms of trading. So without further ado, let's start off with the market outlook first, and then we're going to talk about stocks in the Singapore market. Then we're going to move into the web charts and discuss more features. So let's take a look at the chart right now. So we're moving into the Dow. Last week, we have seen a consecutive of the downfall of the Dow, where it has fallen for 4 straight days. You see that 4 candles only. Yes, that's not wrong because we had a holiday on the 6th of September, where the US closed for Labor Day. So after the non-farm payroll, the market was bearish because the data wasn't that good. On top of the tapering that is coming in the end of the year, the market is unsure of the fiscal policy and how it's going to help the US economy to recover further, because due to the poor non-farm payroll, obviously the US market economy is not really doing as well as expected. So that led to the fall of the Dow. Without hitting its targets, we saw the Dow continuously drop below its major support level at 34712. So last Friday, we have seen the broad market selling. Most of the stocks were down despite early positivity. The late sell-off represent the uncertainty, and it ends off the week on a very bearish note. So you can see on the weekly chart, the Dow has actually formed a long black candle. So what is going to be for the Dow with the major support broken? The next support or key support level that we are going to look at is within this zone from 33970 to 33735. So if it continue to slump, we may see this support zone get tested. Typically, if this is a month of correction, then we are looking at further downside. A 5 to 10% is quite a norm, and if I were to measure to the lowest point of the key support level, we are looking at a 5.3%. So this sort of corrections is quite normal. So it may be persistent till the downfall might be persistent towards October before a real recovery happens. So let's see how the market would move. Is there any adjustment of the fiscal policy? Because going forward, we are looking at this week. We are looking at the next jobless claim and whether it can actually have some improvement, then the market may move up. Then we have the S&P 500 to look at as well. So S&P 500, similar to the Dow, has broken its support level, but at least it hit our target and then move further. Like I mentioned last week, I reluctantly set the upper target, but as I known that it's known to me that it is very difficult to move further as the S&P 500 has actually hit the all-time high, and the tendency of pulling back is there. So the index can pull back 5% if S&P 500 continue to do so. 5% will be below its support level. So if the market is just a short correction, I think it won't go 5% for S&P 500. Probably a 3.8% to test its major support at 4373. The worst case scenario for the year, probably to here. So that will be around 7% correction. That is quite drastic already. So if the index were to correct by 7%, most of the stocks would have already dropped by 20 or 30%, individual stocks, I'm saying. So let's see how the S&P 500 will pans out. Nasdaq broad market selling on Friday as well, right? Most of the stocks are not spared. All the big stocks like Tesla, Apple. Apple had the so-called negative news as the court ruled against its favor on the charges in its in-app purchase. So Apple dropped quite drastically and dragging down most of the other stocks as the market faces late sell-off during the day. So the Nasdaq support level over here, we are looking at 15402, then followed by 15258, and then followed by 15196. And if this is a deep correction, then we'll expect about 3 to 4% or even 5%. So if it's a 5% correction, then we are looking at 14900. So next week probably is a crucial week ahead. Let's move on to the Singapore market. The STI actually had a quite a good end to the week as it rebounds strongly from its slump to move towards its minor support at 3108. So if it continue to move up to test this minor resistance and even break out from there, then we could probably see a change in trend. But next week will be tricky as well because the US market is not doing well. And coupled with China's uncertainty that led to uncertainty in the Hong Kong market as well. So next week will be tricky. So what would it going to be is that next week we are going to focus and zoom into the infection rate. The COVID-19 infection rate has been coming up quite strongly, I would say. And is there going to be any tightening restrictions going on? All these are really a point to note, okay? Because somehow the market sometimes can react negatively towards all these change in the policy by the government. So if the market don't rally up, then the support level to look out for is 3060. Or if it can't hold, then the next support level will be 3050, then followed by 3027, and then followed by 3024. So all these support zones are pretty crucial, and hopefully everything would turn out more positive than more negative. Move on to individual stocks. We are looking at the banks first. Right, I believe that most of my viewers or most of you over here would have some interest in the banks because our banks are pretty strong and they have a very good track records of recovering from the low, especially if you're looking at the chart right now. DBS is actually sitting above its 50-day MA support, and it has gone above its 20-day MA. And here we are looking at a important week ahead as DBS trades near its major resistance around 3051 to 3056. If you can break out from this sideways consolidation, it can definitely help to lift the STI towards the new high. And of course, itself, its resistance, key resistance to watch is 31.41. So let's see next week. Can we have more positive action? So you can see that from the indicators perspective, I have MACD over here. MACD is turning positive, and we would really welcome a breakout to see whether DBS can move up continuously. The candle pattern looking good as well because it has a long lower shadow, which tells us that the downwards price action is actually supported by buyers, and the higher closing confirms that buying action. So this is one of the supporting factor or one of the observation that we can look out for potential breakout. Next, let's move on to OCBC. OCBC has a very similar candle to the DBS as it had a higher closing after an early sell down. The selling was absorbed by buyers, and the only difference for OCBC from DBS is that it had some MA resisting it. So if the bullish momentum comes in, it has no problem to pierce above these MAs, and it has a good chance to continue to move higher if we can pierce above the MA towards 1198. Then going forwards after 1198 will be 1227. So we are looking at a positive MACD over here, and this could be a good sign for next week. So Monday, tomorrow, if we have a good start to the week, we probably would have a good end towards the end of the week as well. So let's hope that tomorrow is a positive day with our market shaking off the US overnight weakness, to recover further. Having said that, of course, if the market cannot shake off that sellers, it will not pierce above its resistance, will not break out above its resistance. Then the support level for OCBC to watch will be 1153 and 1137. Okay. UOB also have its resistance to watch as well. If you are looking at the resistance over here, we have 2585 as its horizontal resistance, then it's 20-day MA as another resistance. So there is a confluence of resistance over here. So if you were to look back to the other two banks with OCBC and DBS, in fact, all of them have their own resistance, be it horizontal or moving average. So next week really will be a crucial week ahead. Whether it can break out or not, that would determine whether the market is bullish or not. Now, AEM, moving on to the tech sectors. The tech sectors could be affected by the bad closing in Nasdaq. So AEM, in fact, was trying to rebound off its confluence of 20 and 50-day MA with a hammer as it closed up the gap. But unfortunately, the closing isn't that beautiful. So we are looking forward to a retest of 420 resistance. If we can do that, then it can form an ascending pattern, which may suggest more upward movement. Because here, if I were to connect the lows, you can see higher low. But if AEM were to break below this confluence of support from the 20 and the 50-day MA, and below this so-called projected trend line, then we may see a change in patterns where it's not an ascending pattern, it could be a rectangle pattern. But the key support will be from this zone to these zones. First, we have the horizontal support at 389, coupled with 100 and 200-day confluence together, where it lies on the lies on this 3.86 level. So we are going to look forward to next week's actions, whether it breaks support or it goes to resistance. It will tell us likely where the next direction AEM is going to hit to. Okay, so when it tests 420, the chances of going up faster is there. Now, if it goes down to 386, of course, you got to find its support, find its own footing again, then rebound to move and recover and move back to its bullishness again. So going back to 386 will take a longer time for it to recover, to move back to resistance, and then by then it could be already coming November. Franken, we are looking at an uptrend with the trend indicated by the indicators slightly weakening right now. Okay, as there's some divergence from the indicators. Okay, so you're looking at stochastic and MACD, both having divergence. So the only way to show that it is still bullish is to break above its 2.42 resistance to continue its uptrend, else it may move into a sideways consolidation. So if so, watch out for the Bollinger to get squeezed. So if Bollinger gets squeezed, means that there is a tight range of trading for the counter. So that will be a better sign for those who are holding these counters, as there's still chance for it to break up and also at the same time fulfill the divergence signals. And it can negate this divergence after the breakup. So breaking upwards to 42 or the Bollinger squeeze going forward. So squeezing like this, as I would assume you may go to, if it fail to break out immediately, then we would have to wait for the breakout to happen after the squeeze. So let's see how long it squeezes up. Sometimes it takes a short while. This squeeze only like 1, 2, 3, 4, 5, 6 days. This is 1, 2, 3, 4, 5, 6, 7 days, and then followed by breakout, followed by breakout. So we have this. There isn't any squeeze here, but the price action is actually consolidating. So there isn't any squeeze as yet. So if it really squeeze, then this time around may take a longer time compared to the past action. So we're going to see what's going on going forward. So watch closely on the 242 resistance, and of course watch closely on this MA, on the 20-day MA, because this MA has been guiding this counter pretty well to move up in its uptrend. Okay, so since May until now, the stocks has been trading most of the time above the MA, and the stocks, like I said, has been guided pretty well. So here you can see it found some good support from the MA, then it rebound and break out thereafter. Next, UMS. The bonus issue is coming, but when is it going to be? No news yet. We are going to wait for the EGM to complete, where the approval of this bonus issue comes from the shareholders and the board, everything what you can imagine on the process. of issuing bonus. And from the chart's perspective, we are seeing that UMS is trading at its 20-day MA just below it because it tried to close above it, but failing to close above it. It closed just right below. So going forward, UMS, is it going to be bullish? It really depends on whether it can test this major resistance at 175 to 176. Right? If it tests that resistance, then there's a chance for it to be bullish. But if it were to come down to test 164, which confluence very close, or rather this support is very close to its 50-day MA, then we may experience some more downside. So we have to wait and see what's going to be for UMS. So some traders who are interested in getting into UMS, so what are the considerations? It's a pretty tight range of trading for UMS. Buying low, selling high is one of course, my favorite strategy. So buy low, where do we buy low? Because we don't buy low just because it's perceived low, but the best is that if you can confluence with the MA support or the horizontal support, it will be most welcome for us, more assuring for us. So here, if we are looking at an entry, going above the 20-day MA seems to be one entry. If not, then we have to wait for a lower entry around 164. But by then, if you come to 164, I have my reservations. Probably I will just go in half of the position that I would like to have in UMS. Why? Because going to test 164 not necessarily suggests a good sign, because breaking that 164 support may suggest more downward action for UMS. But I'm not worried about holding UMS if I got into the bad situations, because this counter has track records. Result is good. The fundamental is strong, and it always recover after a sell down. So case in point is that we can see heavy selling over here, but UMS recover strongly, and along the way you collect dividend while waiting for the price to get higher. So I'm not particularly worried, but the right strategy to use, of course, is you can use a few of this strategy. One of it is called dollar cost averaging. I believe everyone have heard about this. It has been a very popular words, three popular words in YouTube, where people are telling you dollar cost averaging. But really, how we should dollar cost average? One of the way is that we would want to dollar cost average at its support level. So for example, if I'm doing dollar cost averaging on UMS, I love UMS, 164, one level, one batch, meaning to say, if I have 50,000 to invest in this UMS alone, then the first 10,000 will go in at 164. Then followed by the next one, 153. So the next batch of 10,000. So we have 5 times the average. Why 5 times? Very importantly, you must understand the stock market typically corrects in a bull market, corrects about 10%, or worst case scenario is 15%. Okay, in a normal bull market. But then if it's like COVID cases where there are fears, last year we corrected 35%. So if I'm talking about 10%, so or 15%, so if you see here from the top to this 153 level, this is about 15% already. So you have 2 batch in it. Now if the COVID cases get worse, and we are looking at these 30% correction, for example, 30%. So the next level to dollar cost, I would say the next key support will be around here, 138. Okay, so you have 1 time, 2 time, 3 time, and then the 30% will be the 4th time. Okay, 125. So you have 4 times. So you have utilized 4 ammunition out, and then now the last one is to reserve for that spillover, where if the market were to have a deep correction where it goes for maybe 40%. So if it goes for 40%, then your last batch will be around here at 102. Okay, so if the market didn't correct that, at least you have at least 2 to 3 batch already fire in the market and waiting for dividends. So going forward, right? Going forward, your balance amount can look for other good stocks to do dollar cost averaging, or if you want to really reserve for UMS, you can, but then the next round, of course, you have to wait for the next round of corrections as well. Now, ISDN going forward has a chance to rebound up. So what we have seen for the past week is that ISDN, as mentioned last week video, is that ISDN can form a double bottom. It did. It had a breakout, but disappointingly, it hit to 69 and then got sold off to close at 675. That's a pretty disappointing closing, I would say. But on Friday, it had a very good fight back, second chance. So if it can test 69 this time, then ISDN has a chance to recover and move back towards 715, which is the MA resistance. So once it breaks above 715, hopefully we can see 73 or even higher to close up this gap over here. So there is a gap to close. If ISDN can outperform, it can close up this gap, then it will be a fantastic move. Okay, so next week crucial. We have a higher low right now over here, low, and then this low, higher low. Next we need a higher high, higher low, higher high, if possible. And then we see the trend continuous. Let's connect the dot together. Okay, so we have 1, 2, 3, 4, 5. Wow, that would be fantastic. And then the best is if this is even higher than 277. Okay. Moving on, Grand Venture. This counter is going to move into mainboard trading, and after the announcement, it rebounded strongly to this resistance. I would say 133 and broken out from it. But disappointingly, on the next following day, the follow-up buying isn't that strong as the market dumped it to close lower, forming a shooting star, and it got some confirmation to push back lower towards its support level over here, this 20-day MA support. Now, if the stocks remain bullish, it should stay above this 20-day MA. As you can see, this stocks has been above the MA for quite some time. And you really need to challenge this upper shadow. So to challenge this upper shadow, it needs a nice white candle. Close up and then hit this resistance at about 145 to continue its bullishness. So next week, I'll be watching very closely on Grand Venture as well to see whether first day of the week it can close above 134. Then the next following week, can we see it close? Oh, not sorry, I beg your pardon, not next following week. The next following day, can it close at about 139, etc., etc. Okay, 139. Or even to 145, which I've mentioned earlier. towards the end of the week. If we can do so, the uptrend remains intact, we have a chance to break up from 145. Some power, we are looking at a good pullback, an optimistic optimistic rebound. I say a small rebound candle over here. It's not particularly strong. Technically speaking, some power remains in consolidation as the volume remains light. And as you can see from the MA over here, we have the 50 and 100 currently blocking some power. So really a strong rebound would help this counter to rally up towards this resistance at 725. Okay, so how some power will be. So we're going to watch out for the next candle, because breaking below this 200 is not going to be a positive sign, especially when you cross below the 20-day MA. It may be further bearish. But optimistically, the chart still look bullish. Some power still have a chance to go up higher. Sarintech, as the chart develops, is looking more bullish as I am uncertain about its upward movement due to these two long upper shadow. I somewhat got some confidence by the closing of last Friday, and we have seen this 20 and 50-day MA holding this counter, supporting this counter pretty well. So it is still important to move up to test 755 and 765 and close strongly above this 765. Then we have a chance to continue higher to move up towards the resistance at 825. Okay, so some power and Sarintech has to really move up above its resistance in order to show more bullishness. Okay, then we have SGX. Okay, so why I want to talk about SGX is that SGX 1030 resistance is a pretty crucial one. If SGX can break out above and move up to 1073, then we can complete a recovery as we have higher low and higher high. So SGX all the way, do a breakout, a nice breakout, hit 1033, recover nicely, find support at around 1050 thereafter. After hitting 1073, pull back to find support at 1050, another higher low breakout, higher uptrend continues. Okay, so let's hope that this can work. ST Engineering 200-day MA has been, holding this counter pretty well, right? No doubt there are some whipsaws. These are whipsaws. These are whipsaws. But the strong closing forms a hammer pattern, coupled with moving average. I beg your pardon rather. Moving average convergent divergent. This is what I'm trying to say. MACD is going to be positive. There is a chance. Okay. Of course, everything that I've said is just a chance. Ultimately, the stocks has to clear 384. After it clear 384, then 388. So by going through all these charts, seems to be having some optimism where this counter seems to have chance to move up. But it still depends on the sentiment next week. So next week could be a crucial week ahead. If next week we can't see any rebound, selling continues, then week September, week October, then we may see some peak in November before the market goes into a quiet moment where historically, if you have observed right before Christmas, the market is rather quiet as most of them break for holidays. Okay, so these are the things that you can look out for next week for the SCI market. Let's move on to the charts. Okay, so some of you, like I said earlier, when I start off this video, might have already start to use the new chart. Okay, if you have done so, I will encourage you to continue to do so. Right. For those who are already signed in, you probably had noticed this Telegram. You can just click on join now and then sign in as Telegram, sign in with Telegram, and then join our membership group in this Telegram. When there's any news update, it will be broadcast through that channel. It's free, so why not just join? Okay. Now I'm having the chart over here. So last week I talked about having the indicators, and you can actually use the intraday charts to help you to analyze the market. Not necessarily using the chart for live trading, but the aftermath, where you can use the chart to understand the strategy that you can use during the intraday, which I've demonstrated how you have this Bollinger Band to help you. Now, if you look at the top corner, these are the indicators that I have on the screen. And of course, if I would want to adjust the indicators to suit my strategy, adjust the period like moving average. So like here I have MA moving average 50. I can just simply click on the setting button, and then I can just change it to say 40, and then I'll just apply. Right? Some traders love to use 40. Some traders love to use 24, 21, some weird period where they find it's more suitable to their trading appetite. Okay, so some traders like to just stick to the textbook, where 50, 100, 200 is a textbook moving average period where historically it has been proven useful. Okay, so these indicators, if you want to hide it, you just simply click on this arrow to hide the indicators. Now, if you like to delete off some of these indicators which you do not wish to see, just simply click on this remove, and it will just be removed. Of course, you can edit back through the indicators window over here. Yeah, it will just be back. Right now, the next thing I would like to share with you is that just now I mentioned that UMS is a fundamentally good company. So let's just go to UMS here. Okay, so you can see UMS very similar to the chart that I have used to analyze. So this is the web version of ChartNexus. Earlier on, you are looking at the ChartNexus software version. So I can turn on MACD as well to correlate to the chart that you have seen earlier. Next is that I mentioned that the fundamental is very strong for UMS. So how do I know that? Now, this chart provides free fundamental data. Okay, so how do you turn on this fundamental? Over here is by going to this vertical tree button. So once you click on it, then you can see FA information over here. So just click on FA information. Then we have metrics and financial statements over here. And over at this drop down allows you to switch from annual report to interim. Okay, interim means that we are looking at half yearly or quarterly. So this is called interim. Interim means it is not the finalized result of the company. Usually the finalized is the annual report, where we look at the whole year performance, how the company has performed. But for fundamental analysis, if we were to wait 1 year for that report to come in, it may be a little bit too late. So therefore, most of us who use FA would like to use interim. Okay, so look at progressively how the company achieve and works towards its annual target. Okay, and from quarter to quarter, from half yearly to half yearly, whether the company is improving or is not actually, it is moving downwards, then it can give us some clues as in why the share price also moved down, breaking support levels. Okay, so here we have this selection. Next is this very interesting feature that I love to use. Okay, so this is called the FA template over here. So when I click on this FA template, right, it has broken into different categories. So we have financial highlights, dividends, income statements, additional income statements, balance sheet, cash flow. So if I were to click on these financial highlights, there are a lot of options for me to choose. Okay, my favorite to look at is EPS, earnings per share. So it tells me how much the company earns per share for that half yearly or the annual report. Then price to earning ratio, it tells me how expensive is the stocks. Okay, so these two are my favorites. Then I like to look at the income statement, where I would like to look at its total revenue. Okay, so in terms of fundamental, total revenue is the top line. So they are looking at the top line growth, and then the net income is the bottom line growth, where they are measuring the company through these two metrics. So if the company half yearly to half yearly over half yearly, if there is a increase in total revenue and net income together, then of course it has a very good performance, and there is a strong reason for the share price to move up. Then I have this cash flow. Okay, so this free cash flow is very important as well, because it is the vitamins of the company. So whether the company can tide through a short-term so-called shock or weakness, the free cash flow is very important. So after I've clicked on what I want, I just need to save template and then close it. And then automatically all the key metrics that I want to look at will appear on this table. So let's say I want to add on another one. I'll just go back, and then now I want to look at cash from operating activities per share, or cash flow versus interest coverage. Then I'll just click on it, save template. Then I will have one more metrics over here. And of course, if I'm not interested in this, I can just uncheck it, save template, it will disappear. Now I want to look at total cash dividend paid, save template. Okay, so this is how you can add in metrics and remove the metrics, save template. No, it disappear. So we close it and we go back. So over here we can see that all these key metrics are already conveniently right in front of me. So I would like to look at the interim performance. Okay, so the interim performance will show me whether the company's earnings are growing. So we can see the net income of the company. Okay, if we were to mask off this Q4 2020, in fact, the company has been growing quite steadily. Why Q4 there is a tremendous drop? Because they have done some write-off, impairment write-off. That's why the net income has gone down, if I'm not wrong. Okay, but overall you can see a steady growth in the net income. So which means that the company has been growing very well. And then we are looking at the earnings per share. It has been quite steady as well, increasing steadily. So the bottom line is growing. The top line is also growing as well. So we are looking at over here, barring the Q4 2020, we are looking at a very strong revenue growth as well, as it has increased tremendously. Look at the red and the green. What does it mean? The red means that compared to the previous quarter, it has declined. The green means that it has increased compared to the previous quarter or half yearly. Then we have this very interesting option for us to look at all this graphically. So we just need to click on this button, and then you can see that how it looks like graphically for its price earnings ratio, for its total revenue. In fact, it's on an uptrend, and the net income is also moving in an uptrend as well. Okay, interest expenses has came down in Q1. Okay, and then of course, by looking at interim itself, is good, but it will be even better if we can compare with TTM, means trailing 12 months. Trailing 12 months is like a replacement for the annual report. So instead of looking at the annual report, waiting for the annual report, we like to look at the trailing 12 months to see if I were to, like a moving average move, how would the company looks like in terms of performance. If you look at the revenue, in fact, the trailing 12 months looks quite fantastic. The top line moving in uptrend. The net income is also not so bad as a rebound. And then, of course, all these, it is actually helping us to make an informed decision on whether this company is good or not. So if it's a good company, of course, the dollar cost averaging makes sense. Then, of course, you can create your template. Now I have this all under the interest. Just now, if you were to go back to this template, interest template, I can have another template, which is interest 2, for example. So I have interest 2 created. So this interest 2, instead of looking at all these free cash flow, I can actually have it turned off. Then I'll look at the dividend yield or dividend payout ratio, very important. Then I'll be looking at, I'm just turning off all these indicators. I would like to look at the price to the net asset values, net asset values per share, earnings per share growth, then the cash flow will be somewhere like net cash per share, etc. So I can have all these different metrics in different templates. So I can have interest 2, then you can see the template has changed. Let's go to interim. Oops, yeah, I got it wrongly. Oh, sorry, just now I think I get it wrongly. I need to switch to interest 2 and then click on it again. So I need to turn back on my the other templates that I was looking at. Total revenue, net income, operating cash flow. Some might want to include debt, because if the debts are going down, could also means that the company is being well managed. So total liabilities. So go back. So this is the interest 1. Then I'd like to have the interest 2, which I have changed earlier. Okay, so here, the interest 2, I would have this price to sales, for example. Then I will save template. Then I have interest 2, I have price to sale over here. Okay, so this is how you can have different templates of the FA metrics for you to analyze and look at stocks differently, because some FA metrics works for certain kind of stocks, but it doesn't work on certain kind of stocks. Giving you example, it's like the banks. Okay, the banks has a special set of the metrics to look at. So of course, first thing, what's so special about the banks? We cannot look at the debts. We cannot look at the total liabilities. Why? Because the bank is full of debts. Okay, because we deposit our money inside the banks, and immediately after the deposit, it becomes a debt to the banks. So that's why the banks, we have to look at different kind of metrics. Okay, so with this, it comes to an end to this weekly video. I hope you enjoy it. Have a good week ahead. And if the market doesn't do well, be positive, continue to hold on. If you are holding good stocks, just write out this bad moment, and then the market will just recover for these good stocks. All right. Thank you for viewing this video. I'll see you again next week.